Nielsen Realty Group, sharing the latest real estate news you can count on. Historical mortgage rates, averages, and trends by Katie Collins. After nearly 2 years of record low mortgage rates, 2022 has seen rates rise to levels not seen in more than a decade. That doesn't mean you need to cancel your plans to purchase a home. There's a lot more that goes into the decision than just your interest rate, but rising rates will factor into your decision. A recovering U.S. economy and supply chain issues helped drive inflation to levels we haven't seen in decades. To keep inflation in check, the Federal Reserve has been raising its benchmark short-term interest rate. Those increases have pushed up the cost of borrowing money, with mortgage rates more than doubling since January. The main drivers for mortgage rates in 2022 will be growth plus inflation plus the Fed. Really, in a nutshell, that's what's going to be driving rates. Joel Can, an economist with the Mortgage Bankers Association, told NextAdvisor. Let's take a look at the past few years of historical mortgage rate trends and break down what that means for you. Historical mortgage rate averages since 2019. What's going on with rising mortgage rates? The surge in mortgage rates so far this year is due to a variety of economic factors. Persistently high inflation is a big one. September's inflation report showed prices up 8.3% year over year, which was lower than August's 8.3%, but still far too high for comfort. Another important driver behind mortgage rate increases is the latest rate hike by the Federal Reserve, the central bank's third 75 basis point increase in a row. Until we get some sustained evidence that inflation is beginning to recede, the upward pressure on mortgage rates will remain, Odetta Kushi, Deputy Chief Economist at First American Financial Corporation, told us. Mortgage rates are moving around quickly, with big changes every day. Experts say the volatile economic environment makes it important for consumers to shop around and to keep an eye on their rate offers when buying a home. It means you have to watch rates like a hawk, Melissa Cohn, Regional Vice President of William Revis Mortgage in New York, told us. History of the 30-year fixed mortgage rate. This chart, which uses data from a survey by Freddie Mac that differs slightly but generally tracks with the bank rate survey used by NextAdvisor, offers a glimpse at how today's rates compare with the past 2 decades. What can homebuyers do about rising mortgage rates? The current housing environment is particularly tough for first-time homebuyers, but it still might make sense to buy. It's always a good time to buy a home, if that's what's important to you. It's just about doing your research and making good informed decisions. Eileen Dirks, head of mortgage at Laurel Road, told us. Rising mortgage rates have made affordability increasingly difficult for homebuyers, despite some drops in home prices. If you're considering a mortgage, experts say it's more important than ever to shop around with different lenders, as rates can vary dramatically from day to day and from lender to lender. Until you're ready to lock, you need to keep your eye on more than one bull, Cohn says. What about home prices? The big surge in mortgage rates has started to bring down home prices. The median existing home sold for $389,500, up 7.7% from a year earlier, but down from figures of more than $400,000 seen earlier in the summer, according to the National Association of Realtors. How quickly the housing market is turning around depends on where you are. In some cities, prices are seeing month-to-month price drops of nearly 3%, while others are still riding a wave of increases. It's very market dependent at the moment, says Robert Heck, Vice President of Mortgage at Morty, an online mortgage broker. Home sales figures are dropping significantly, down 0.4% from July to August and nearly 20% from August 2021, in part because homeowners who have favorable mortgage rates are unwilling to sell and get a loan at a much higher rate. Home buyers facing a difficult environment can find creative ways to save money on a home purchase. One is to consider an adjustable rate fixed mortgage. Con says they tend to offer periods of several years with a fixed rate, and it should be significantly lower than a 30-year fixed rate would be before the rate starts to adjust with the market. That should give you a few years to reinforce if the market improves. If you would like to read this article, we will have a link to it down below in the description area. So, what do you think about the historical mortgage rates, the averages and trends? Feel free to comment down below with your thoughts. We'd love to hear from you. And while you're down there, hit the like button and subscribe to the channel. Hit the notification bell and you will be notified when we release our next video. Thank you very much for your time. This was a Nielsen Realty Group video. Have a great day.